On July 13, billed customer X for putting braces for $800. The customer paid $300 as a down payment, and the balance will be paid at the end of this month. For this transaction, observe what happened. The first sentence says, on July 13, billed customer X for putting braces for $800. Normally, if this is the information Abigail provided, the journal entry of this transaction is debit on accounts receivable and credit service income. But there is an additional statement. The customer paid $300 as a down payment and the balance at the end of this month. This statement affects the journal entry with an additional account on the debit side, which is cash, amounting to $300. This is the amount that should be used because it is paid by customer X as a down payment. The full amount of $800 is allocated to service income because the service has already been rendered to customer X. To make the credit and debit side of this journal entry equal in amount, the difference between the service income and the cash should be allocated to accounts receivable, amounting to $500. So far, you have only encountered journal entries that have only one debit and one credit. This kind of journal entry is called simple or single journal entry. The second kind is called compound journal entry. This is a journal entry with more than two account titles on either debit or credit. Take note that a compound journal entry must be prepared under the following conditions. First, the transactions that occurred must be of the same date. Second, transactions must be of similar nature. For example, all transactions must involve cash payments. The July 13 transaction is recorded through a compound journal entry because it has two debits. Moving on to July 16 transaction. On July 16, Abigail paid the local newspaper in full. In this transaction, Abigail paid the local newspaper from the transaction dated July 11. Debit to accounts payable to decrease the liability, and credit cash to reduce it by $50. On July 18, Abigail withdrew $100 for personal use. The withdrawal of $100 is for the personal use of Abigail. Thus, we debit the account title Abigail Withdrawal. This account's normal balance is debit. Since cash was withdrawn, the business cash is reduced, and we credit cash in the amount of $100. On July 21, Abigail collected $400 from customer X as an installment payment for the braces. This transaction is a normal collection of debt by customer X, last July 13 transaction. Although this is just an installment payment, we still debit cash and credit accounts receivable of $400. On July 22, Abigail paid the balance on the purchase of dental equipment last July 2. In this case, to reduce the liability, accounts payable is debited, and to reduce the amount of cash, the cash account is credited for $6,000. July 25 invested an additional $600 to the business. Earlier, Abigail withdrew cash from the business, but in this case, Abigail invested additional cash to the business, in which the cash account is increased by $600 and crediting Abigail capital to increase the capital. Account title's normal balance is credit, and is part of the equity accounts. On July 31, paid utilities totaling $80 and salary for her assistant amounting to $160. Transaction is also a compound journal entry because there are two expenses that should be debited. First is the utilities expense, and the second one is the seller's expense together with the respective amounts. Always take note that expense accounts like these two have a normal debit balance. Oh, and by the way, utilities include water and electricity, so don't get confused too much on the term. Then we credit cash. The total amount of the utilities and salaries is used on the credited cash account to balance the journal entry. July 31 received payment from customer X for the unpaid balance. Well, customer X is back again to settle his debt. How much do you think she paid? Last July 13, Abigail billed customer X amounting to $800 with a down payment of $300. On July 21, customer X paid $400. The difference is $100. We can conclude that Abigail received $100, and so we debit cash. The accounts receivable is then credited to reduce the account. That is the last transaction of Abigail. Oops, we're not yet done with the journal entry. Look at the July 1 transaction where Abigail paid rent in advance. It says there 3 months, and Abigail currently used up 1 month. We compute the used rent by dividing them $900 to 3 months. That means 1 month of rent costs $300. Abigail should record this amount by debiting rent expense and crediting prepaid rent. This journal entry is created to adjust the amount of prepaid rent currently outstanding. Don't worry, you'll soon learn more of these when we reach adjusting entries. Next, let's post it to the ledger.